Okay, I'm going to go over the Market Structure Pro indicator. Just going to have a look at how we get this thing set up, how it actually works, how it actually draws the structure, potential ways of you looking at getting into a trade, looking at where potential liquidity lies, and we'll go through possible entry system that you can use from higher time frame down to a lower time frame. So Market Structure Pro, which I actually do have a new version coming out, and I will go through that in a minute. So when you add on first, none of these will be enabled. Really what you want to do is you want to show the structure lines, and for me, show the highs and lows. So once we've got the highs and lows, we get there. Now you can show the old lines, which will then draw the lines, say for here, for example, of where price was previously broken. So it'll show these lines. Now you'll get a dashed line for when a candle closes, and you'll get a really small dotted line, if you see in there, for when it wicks below. So that's kind of how these lines are drawn. I did at the beginning when I first coded this, I wanted to see when a candle would close or when it had wicked, for example, like here you can see it had wicked and then closed back down to try and indicate that price was going lower. Same with here, that price was going to go higher, and obviously it did, but I mean this is only a small climb this is done here on, but this is a 4-hour chart. So what we have here is the lines at highs and lows, which is what we have. We can also have plot crosses at highs and lows if you really want that. It gets a little bit messy, and what you will notice is, like this, for example, here, that this is plotted a high. So the way that the structure lines actually work, so they don't print until after a 3-candle formation. So you should, if you're using this indicator, or you understand about structure, you should understand that it takes around 3 candles. Well, it doesn't take around 3 candles, it does take 3 candles. So you want to look for the highest of 3 candles, okay? So we have this candle here. I'm just doing it like this, easy, 1, 2, and 3, okay? So we've got 3 candles here. As you can see, we've got candle 1 there, candle 2, candle 3. Now, out of those 3 candles, which one's the highest? It's obviously this one. So when that candle closes, that confirms that that's a swing point. So we've got 1 candle here. So we'll just zoom in here and here a little bit more. So we've got 1 candle here, another candle here, and another candle here. Okay, out of those 3, which is the high? That one. Then you've got another 1, 2, 3. Do we have a low? No. Do we have a high? No. 1, 2, 3. This has got a high. Okay, at this point here. Then we keep going down until you find a high of a low of 3 candles. The next one you get is 1, 2, 3. It's this one here. Now, because this structure didn't come back down, and let me get rid of these lines. Because this structure didn't come back down, for example, down to here to create a low, then back up to here, that's why that line has not been marked out. Now, on the highs and lows, when you plot them, it does obviously pick that up as being a high, which is fine because you should be able to mark that one out as well. You need to notice this. But the way that I've coded the lines is that if we don't get a swing point, it will then extend this line down to the next point. So unless we get a low here, say if this one did drop lower, then we would have created a swing point. So what would happen is that this line would draw and then it would just extend down. And these lines are not used for trading. When you're actually live trading, you want to be looking up and opening up structure, and actually waiting, going, okay, what has actually happened? And you can use this on the lower time frame when we're down on the 1 minute, for example. Obviously, the lines get drawn a lot more and it's a lot messier down there. But that's kind of how you would determine how these lines are drawn. Like for example, now, if I move this, oh no, so we're done. Yes, if I do now, we can't extend that line down there. It won't draw that yet. If we get another candle here, for example, which now opens like this, and the wick doesn't go lower than this one, this becomes a swing point. And at this point on the close, then this line would draw. Okay, and what you'll go then is you've got break of structure at that point, and you have an order block in there, and you also have an order block fair value gap. That's again moving on to something else, which is obviously other indicators that you can use, which I've got there, which you can add on then to actually build up a story about where price is going. Excuse me. Okay, so that's the basics of how the structure gets drawn. And yes, it lags in sense of it needs 3 candles to form in order for the structure to be drawn. So if we look at drawing some structure on here now, let's just use this last week that we've had, where we can see we're just making lower lows. Now we know where this one hasn't drawn yet. And then we can go down to the 15-minute and we'll see the structure which is drawn here. Now I'm going to just tidy this up a bit. I'll show the old lines. You don't really need the lines at the high and low. Okay, now we can just move this along and we can just mark out we have a 4-hour structure then over our 15-minute, like so. Okay, so there's our 4-hour structure. So if we're trading the 15-minute, for example, if you look for premium and discount, you can quite easily come down here at this point here, look where your 50% is, and if you mark out your zone there, you know that if price wants to get up into this area, you then want to look to short. So you can hear my washing machine going off upstairs. If we now look at this, we've tapped into here. We have now swept an area of liquidity. So what I will do is I will actually do this as a replay so you can see how these structure lines actually form. So we've determined off the 4-hour where our premium and discount is. We've come back into our area where we would look to short. We have this high at the minute, which is now tapped into there, and we have our low, which is down here, where we want price to break. This is how I would enter the market. So price would take that low after sweeping that high. You do get a 15-minute candle rejection in there, and you also get yourself a breaker block inside here through fair value gap as well. Okay, so basically that is, okay, shall we look at short in this position on here? Okay, and there we go, put the stop at there. Now, depending on what your target is, but let's just say for argument's sake, we know it takes this low down here eventually. I know it doesn't come back up to the stop, but what I've basically used there is I've just used the structure of what's happened here to find myself an entry. Okay, so as we know, I'm just going to cross this off because we know what happens here. As we know, we come back up into that area and then we drop back down again. And the same thing happens here. Obviously, this might have been used, but we come back up here. Okay, we sweep this level here and then we break the low here. So this area now, in this point here, if price comes back up, we can look to go in short again on this one. Now, if you look at the 15-minute on this side, the only time you actually get a break of structure is down here. Okay, because we had no actual low coming in or no actual high created. So actually, you can see that there is a low in there, and that will be determined and show up on the crosses, which is there. But because we had no swing point on the high, it doesn't create, and this line just gets drawn up. So you want to be able to look and make sure you understand the swing points and how they're drawn. And kind of this is what all the indicators that I've designed and created here are to teach you to understand about reading structure and etc. and fair value gaps and order blocks, in the hope that one day you won't even need them, or you can just have them there and you can just switch them on and off whenever you need. Just go, let me just have a look and see what's going on here. Okay, so that is it really with structure. It's a very, very simple idea. There are other structure indicators out there. They're more so done on look back of candles. I didn't like that because I wanted to try and mimic exactly the same structure as I would draw it. And I would always, if you want to do yourself a little test on structure, you can turn off the structure point and you can try and draw your own structure. So you look at the highs and you look at the low. See, there's a low there. It didn't create another high. We've got this one here. This one will probably draw like that. We come down to here, here. I don't know if that's going to be one. Another one up there. There's a third one there, there, like that, for example. That is kind of the structure that goes on in this area. And if we turn this on, that was close, but look, see what it's done here. And this is one thing you have to understand as well. So we've got a swing high, and then we've got this ever so slightly lower. It's thinking that it's lower. Obviously, it hasn't gone back down this way, but that is still thinking it's lower than that, hence why it draws that way. So if you do see ones like that, you could literally just say, okay, I'm going to ignore that, but this is what. But if you actually notice, it actually comes down into this fair value gap through here and then reacts going up. Bear in mind, this is on a 4-hour chart, so you can look at trades going into that. The next thing on the structure, the way that this is all drawn and based, is like we have the swing high and the swing lows of these points. What we want to determine on a lot of these is how far price moves past the swing high or moves past a swing low. So what I have actually created here is a standard deviation level. Now, what you would be looking at when a standard deviation level is, let's use here for example. So if we now have lines at highs and lows, for example, on here, these are potentially our liquidity levels, okay? So what we get here is that you have this low. So this is obviously printed now and drawn. It wouldn't have been drawn on this candle, so we can go back. So our deviation low past this low is 14.48 pips. Now that's an average of how far price travels past the high or low on this time frame. Okay, so 14.48 pips is an average of what it does. It calculates the high and it calculates the low and it just returns an average. So if I measure from here to here, here we go. Let's put that. I haven't put that dead right, but we got 14.48 pips, around 14 pips, okay, is where we would go. Now, anytime a new swing point is drawn and created, this disappears. So you would want to mark out these areas and go and mark it out and go, well, the deviation point for that low is there. I expect price to come in or around there if it's going to react. I'm not saying they're going to react to every deviation point. Sometimes they'll just smash through them. But it's to have a good idea of where you think price could go. So if you're trading and you're in a sell and you go, okay, well, I'm at least going to hold it until it gets to the deviation or around the deviation. And you also have to use other confluences. For example, on here, you've got a low. If you look over to the left on there, you will have a fair value gap. And of course, if you're using the fair value gap indicator, which is also available in the suite, it will then show you a fair value gap, which is there. Again, we'll go. That's for another video. So I'm looking for price. If this is going down, I wanted to look to at least come to this deviation low. And if we look at what price does, it comes down. It does react off that low, but it doesn't mean that it's going to react and now go up and hit the deviation high, and then it's going to come back in deviation low. I mean, if I could create that, then I've created the holy grail. But this is basically all it does, is when you've got your highs and you've got your lows, it is where roughly on the average price will go past the point. So you will see sometimes you will get price where it does react to these levels. So here we go, we had this deviation low again. We've now come back down to it, past this low, and it's gone into it. And you can see here we've got some more liquidity levels below, which is withdrawing here. But we had our deviation level. Like I said, if you was in a sell off this with a break of structure here, you're marking out, I don't know, you're marking out an order block is here, for example, and you're going in a short off this. This is using a 4-hour, your high protected above there, and you're targeting that deviation low down there, for example. That's where you would look and try and use these levels which it gets drawn. So we've got a deviation level touch there, and as you can see, they get drawn after each high and low. Another deviation level now, which is based off this low, not this one. Okay, so you have to remember each low that gets drawn. So there's that deviation. This obviously has opened up lower and gone up. And now we're looking for deviation highs to get tapped in there. So what it's telling you is that it's basically saying to you that, okay, if price is going to go and take that low, we're going to be looking to go at least down to this area. You need to backtest this. You need to go through and work out how you can add it into your strategy. But once you do understand and learn how it works, it's a very powerful tool. The next one that is also inside here, which is going to be updated, which I've not added yet, is the average pullback. So the average pullback, and I have a table here which is individually, so it works it out on the bull and on the bear, and then we've got a combined. So when it takes a level, for example here, like this high, what you want to expect is once this high is taken, we're then looking to see how far back it's going to pull. Okay, so for example here, we've taken a high here, we're looking for it to come back down into this area. Okay, so and we have to look at the direction of traffic that it's going. So this is a pullback bear. So this is looking, so if I go here, we're now moving down into the market. As you can see, we're down. This is working out where the pullback is. Forget about the bull. And this is why I've added this. Pullback levels only in the current direction. So I would probably suggest that you use these levels and have this switched on, so it only kind of tells you what direction we're going in. That price is going down here, and if we're going to get a pullback, the chances are it's going to go to that pullback level. Okay, oops, sorry, it's going to go to that pullback level there. Now we do have deviation levels of going past the high and low. If you've tapped into them and then you get into a buy, the chances are that this becomes a liquidity level. Where's you're going to target? You could look to go, okay, well, hopefully the pullback level. And the pullback level there also ties in with a bearish order block. Okay. And again, what will happen is we'll come down. Well, we opened and we gone up and reacted to that pullback bear area there. And as we know, price continues up. Now, let's just wait and see, because what will happen, this structure will change when we get a close over the top, okay? Over a pivot point, sorry, we've got a new pivot point. So now we've got a new pivot point close here. Now we'll get a bull pullback, okay? So at some point, price is going to pull back to this level. And here is now your new liquidity point. Okay, it doesn't mean it's going to do it straight away. You're not going to go, well, I'm going to look to sell to this, I'm going to look to buy. You need to mark these levels out. And again, standard deviation will come into this. Because of this high has been taken here, okay, of this one, sorry, the average pullback should come back down to this level. Now, as we know, the price just continues up on this level here. And then our pullback level continues. So let's have a look and see if our pullback level actually moves. Yeah. That's a bear, sorry. No, not yes at all. It's probably going to do it too. Okay, pull back, bull. So as we're in a bullish market, we didn't pull back. We only pulled back to there. We didn't pull back into there. And now we've flown up into here. And as we know, if you've been trading this week, after we've gone up this level, price is expected to trade back down to here, based off the market structure and based off the average pullbacks, okay? You would be looking for price to trade back into this area here before there is some type of reaction, which is what you get. And that's kind of how you mark these areas out. So you keep marking these areas out and going, okay, because they will change because it's based off the pivot. Okay, this is the first one that got marked out, which was here. So I'll pull back bull. Okay, if we are going to pull back, and if you trade the Fibonacci, that is below the 50%. And pretty much on this, the golden zone, the golden line. I don't use it, but that is based off what this is calculating. Okay, so its price going to pull back to that level, and obviously it does. And then you get a wick below and you close up higher, possibly to show intention of price going higher, which is what we get. Okay, so that's how the pullback and the standard deviations work. It's a pretty strong tool when you use it correctly, and it's just good to have it marked out so you have these levels and you know not exactly where price is going to go, but you have an idea for here, for example, when we get a bullish change over here. Okay, the pullback here, at some point price should come back down to this level in here based off everything that's happened in the past with the pullbacks, and this code is calculating all of these lookbacks on here, and you can pull back samples so you can put that up higher if you want. If you want it to count more than 100 swing points, then you can, so you get a bit more of a data, but on an average I've worked out 100 is okay. That this is going to go up, and at some point we're going to pull back down to this level, no matter what it does, but it will come back down to that level, and obviously there it has done there. Okay, so there is a PDF with Market Structure Pro inside the members part of JP7FX. If I were you, I would get this indicator on. I would start drawing structure. I would see about looking at it about how you actually trade in whatever way it is trade. If it's trading trend lines, for example, or if you're trading liquidity areas, or if you're trading when price breaks structure, you can use this to work out structure on a 4-hour time frame, 15-minute time frame, 1-hour time frame, monthly time, whatever it is. Now, the way I use it whenever I go onto a market is that I will, for example, on the 4-hour, and I will just do this. Let's just go here, for example. Okay, what I will do when I've got a 4-hour, and you can see this is a big now 4-hour range, I will mark out my high and low of the 4-hour. Okay, I will then drop into the 15-minute. Now, what I will do in the 15-minute is, for example, on these levels, you can see them marked out already. These are the levels not touched. So I've got my external range liquidity, which is up here and down at the bottom. One of these levels is going to get taken, and I want to see what's going on. So I will mark out, I've got another level in there, and I just purely mark these levels out. After, I will look to see what else we have in terms of structure, but for now I just mark these short-term levels out. And bear in mind, I trade on the 1 minute, so if I trade on the 1 minute, I'm not looking to hold trades all the way down to the bottom or to the top. I'm just looking at where I can potentially get in to trade. Okay, and then I can turn these levels off. Okay, and you can rename them, like for example in here I have this as internal liquidity, and for example that one there has external liquidity, and these levels will get taken, and you're trying to look at where you can potentially get into a trade. So you want to see a liquidity point get taken, then you see a liquidity point taken, then you want to see one get broken. Now this is just a trade I just did a minute ago, and then okay, so now you can put the structure back on. This is on the 15-minute, for example. Yeah, okay. And now we've got the bear here, so this is now using this pullback. So say if you went short, we did it off the breaker block. Well, there you go. This is now taken that liquidity, and it's closed below that potential level where we have, where there's no more buyers, there's just sellers there. Not just sellers, the sellers are winning, I mean. Yeah, and that entered that way. So that's how I use the market structure to draw out my levels of where I think potentially price will go above or below, to then look for me to get into a trade. But as I say, get on there, draw the levels out, then turn it off, and work out your market structure. Draw them yourself, switch it on, and see what happens. I think this is the closest I can get to drawing a real market structure indicator. And obviously, like I said, it will take a number of candles before it draws those lines. So, but like when you're on the 1 minute, it's going to get very messy, and I would not use pullbacks for or standard deviations really for the 1 minute. I mean, you can try, for example, if we've got where we did this sell on the 15-minute. So we got a bull, we're waiting for this to go bear. Are we going to go bear? We're still bull. Okay, pullback bear. Is price going to go up to that pullback bear? No, see, it doesn't. So I wouldn't really rely on 1 minute shot, because that's only looking at pullback, and the 1 minute is so messy and so loud. I would use this on higher time frames. And when you're down here, you're probably best off turning these levels off and then just marking out what you want to mark out. I hope that's cleared up for a few people about the market structure, how I use it. And I'm continuing to develop the JP7FX website. I want it to become a tool for people to use. I want to try and keep it as cheap as possible for people to join. I will set up the Discord at some point, but I'm just so busy. I do trade as well, and obviously, so I don't always have the time to, to get all these things done. I do enjoy the coding and creating these tools, and so there's a lot more things going on there. The new COT data page is going on, which you'll be able to access as free, but on the members page there is my own AI analysis which is built into the background on there, where it will read the data which comes out every Friday, and it will give us a complete rundown of what actually happened in the market and potentially what the institutions are doing and where they're placing their orders, which can help. It's not a single, just kind of gives a bit of context to your trading, depending on how you trade. And yeah, so thank you for watching, and I hope I haven't bored you too much or confused you too much. I hope you enjoy the tools that I'm creating and making, and I've got plenty more that I will be releasing. You won't need to use every single one. Some you'll find useful. There's ones here that I don't really use. There's ones that I use all the time. But it depends on how you do it. I know there are some people who use ones that I don't, and they just swear by them, that they will never use anything else, only that particular indicator, which is great, which is fine. So it's each of their own, and that's the same with trading, anything in trading. You've got to find what works for you. Okay, thank you very much, and I'll see you on the next video. Make sure you go to jp7fx.com to gain access to all of my indicators. You can create a free account and you'll get some free tools in there: sessions, live market status, lot size calculator, set your own risk guard, and just trade and view credit in there. And if you go and become an actual member, you will then go to your dashboard. When you become a member and log into your dashboard, there'll be a few things to complete your profile. You get the Forex sessions, timings of when they're going to open and what time, and also COT data, lot calculator, and the risk guard. The COT data, or COT, also has my AI analysis built in, which gets updated once a week. This is for members only, so you can flick through and you can check what you're trading and how the institutions are looking with what they've done with their orders in the last week. This is a very, very useful tool if you know how to use it. And like I said, all of this available on jp7fx.com.